welcome back to the Daily Dive. Today we're chatting with Chris Vermeulen from Technical Traders. But before we get started, please like, subscribe, and hit that notification bell. Hey Chris, welcome to the dive.
Hey, how are you? Thanks for having me.
Yeah, thanks for joining us. All right, so what are the key metrics you use to break down a chart?
Well, there's lots of different things that I use, but I use a strategy called BAM, Best Asset Now. It's based on relative strength. So I'm always looking for stocks that are outperforming all other stocks. I'm looking for the leaders in the stock market, and that is where money's most likely to continue to go. And relative strength is one of the most widely researched strategies. Huge academics have done research studies in firms, and it's proven all the way back to the 1920s that if you own the leading stocks or sectors, you're going to outperform the stock market 70% of the time. So that's what I base my strategy on. It gives you, 70% chance of outperforming everyone. And then I apply some technical analysis like cycle analysis. I like to use Fibonacci extensions, which is using kind of momentum and measured moves on the chart. So I really like to kind of get into the technicals. I'm a 100% technical analysis analyst. So it's all about following price. Wherever price goes, I follow it. I typically do not try to predict it so much, although it's fun to try. But the key is to follow price and stick with the trend that it has.
Do you ever look at fundamentals?
I gave up on fundamentals back in probably 2008, 2009 during the stock market crash. That's when that was kind of the final straw where some companies were doing exceptionally well, good earnings, and their stock prices still fell 40, 50, 60%. And that was kind of the last straw. I mean, I'd already been trading for 10, 15 years there. And then I just realized, fundamentals, they just to me, they do not give you any insight of where price is going next. So I completely ditched them and I follow price. I mean, as a trader or an investor, the only way all of us make money is if price goes in our favor. So it really doesn't matter what the fundamentals are, because we see a lot of stocks with good earnings come out, but then it sells off 5 or 7% that day on killer expected, earnings. So it's just something I don't follow, and it saves a ton of time. You don't have to read a lot of stuff. I mean, I just look at the charts and I can just kind of go from there. So it saves a lot of time.
How important are secondary financings, unlock dates, options, warrants, and etc. when evaluating a chart?
Yeah, so I used to be involved in a lot of private placements years ago. I've been around that block and I don't really do that anymore. So being stuck as a technical analyst, I really don't care about financings. It's parts of the finance that I've kind of got out of the equation. And the reality is, when you're getting into stocks, especially like penny stocks that have financing and they're doing issuing warrants and things like that, it's a really tricky game, especially over the last 7 or 8 years, where the stock market, the micro caps really have been out of favor and underperforming. So it's a very tough way to make money. And even when you do get into these and say you buy into it, you into a private placement, you get a bunch of warrants, typically by the time you're allowed to exercise those warrants, the share price, which was up usually several 100%, has come all the way back down to the price that you can buy them at with the warrant or lower. And most of the times it goes a few cents lower. And I just kind of got tired of that game. It's a very tough market to try to get into as a new investor. You really got to understand, I think, the fundamentals and more so the team behind the company. So I wouldn't worry about the fundamentals. I'd focus on the team. That's 100% of it. There's a lot of shady people in the industry, which I came to learn and why I don't touch it anymore. But if you focus on the team, that's where the money is.
So how do you go about screening for ideas?
Screening for ideas. Well, I like to, again, I sort the market using a best asset now. So I've created software that takes all the technicals, takes the momentum and all kinds of other things like cycles, volume flow. It puts it in an order and it calculates which ones have the strongest momentum, the most bullish technical patterns from a long-term standpoint, a short-term standpoint, which sectors are kind of in the hottest index. So if the NASDAQ is leading the way, we want to follow most likely technology and stuff that's related directly to that index. And then I just kind of pick the top 3 performing sectors whenever the stock market gives a new buy signal. So there's times to be in the stock market and there's times when I think you should just be out of it. And believe it or not, about 40% of the year we're sitting in cash. And then the other times we jump in, and when the stock market's rising, we're in these leading stocks, which dramatically outperform the stock market. So if the SP 500 goes up 21%, these ETFs, these leading sector ETFs that we get into are going up 40, 60, 80, or percent or more. So it's pretty exciting, and it makes trading a lot easier when you're not involved when it's not favorable, because it's not fun holding things going down or sideways. So we just step back and wait for another market setup.
Does social media play a role in your evaluation of technicals?
It doesn't. No, I mean, obviously we've seen now with GameStop and AMC and how the social media kind of is just taking over the market and sticking it to Wall Street, which is pretty exciting, pretty interesting stuff. But I don't follow anything other than the technical charts.
Can you please break down the following charts for us? GameStop, Sundial, and Tesla.
Sure. Yeah, let me pull them up here. I've actually got I've got my charts here, and you should be able to see my screen there. So here is GameStop. Now, I mean, GameStop had such a dramatic move that it dwarfs all this little price action down at the bottom of the chart. And of course, this is a very typical type of move that happens when there's some big event, media, news, manipulation, more or less. And you get these giant moves in price. You can see how GameStop had this massive run, went all the way up. It went over $500 at one point. But more or less, it's a herd mentality. They all pile in and chase it. And then what happens is eventually you start to have these giant whipsaws, and you can't really see it too much on this daily chart, simply the way that it moved. But um, during some of these pre-market and overnight trading sessions, we saw GameStop, it rallied 140 something percent at night. Between midnight and 4 in the morning, it fell 48%. And then before the opening bell the next day, it had run up another 97%, all in like pre-market, before people even get to see what's really going on, the average trader. So it's an absolute wild ride. It's not something that I think really most people should be trading. This is pure, speculation. It's a movement, but it's very volatile. And these are the exact type of plays that I steer clear of. As fun as interesting it would be to to trade these and get involved with the volatility, this is the type of play that's going to usually cost a lot of people money, because the way it works is most people will hear about it. You see the price start to rally, and then when they all hear about it, they all put in their orders to buy, and the market opens dramatically higher, and everyone gets filled near the top. The majority of people chasing it, the kind of the newbie traders, the ones that don't understand what's really going on, and then from there, there's usually some like washout, blowout top, and then it'll fizzle right back out. And I've seen this happen, hundreds of times in stocks when they have this type of news, this type of event. It's just a real gamble. And I don't think, individuals should really be poking around this. There's over 8,000 other stocks that you can get into that have a lot of great characteristics that are trending really nicely, especially the EV market, electrical vehicle market. I mean, there's some beautiful plays out there that are consistent and reliable versus, up 150% one day, down 30 or 45% the next. And so you wanted to look at the other one was, I think, Sundial here. Now, Sundial, I really like. I like this kind of sector. I'm not a huge fan of the marijuana kind of sector, but I mean, it's got some amazing moves in it, and you can see we've had a huge pop in this market here in this price, huge volume into it. But again, when you get these great big pops on news, they're going to have a little bit of momentum behind them, and then they're going to collapse. You can see how it's happened in the past. You get a big surge, everyone piles in, and then it fizzles out. And then it repeats again and fizzles out. And then this is another one of those kind of moves from the looks of it. If you look at the MJ, which is the marijuana ETF, which is one that we've been trading, it's moved over 20% since our entry point just a couple days ago. It's got this very same type of move. You can see this whole sector, the marijuana sector, has had these beautiful surges and rallies. It's a very nice move, but this whole sector now, including Sundial, are most likely going to consolidate for a couple of weeks before we see that next leg up. And Sundial could pull back a little quicker just because it's a penny stock, more or less. It's a small cap. But I mean, I think this sector's got a lot of legs behind it. And so there's some pretty exciting price action, I think, in that sector as a whole. The other one here is Tesla, which is obviously the EV market. It's had a really nice run to the upside. It's been consolidating. And this chart is still pointing to much higher prices. We continue to see money pile in to the EV ETFs. There's a few ETFs based around this. And when you look at the volume, it's just more and more people every day are piling into the EV market. They're buying shares and they're holding. And so this is, I think, I mean, we've seen Tesla have this massive run. When is it going to end? Well, I think it's still the infancy stage for the EV market. It really hasn't even really started to begin yet. So we're seeing big money pile into this sector as a whole. And I think it's going to continue to climb. So that's the nice thing about looking at the technicals is there's a series of patterns that repeat, these bull flags. They happen over and over again. And right now it's flagging and consolidating. And I think we could see potentially another big move. As long as the stock market holds up and continues to go higher, we're going to see this continue to muscle its way higher as well. So that's kind of the technical view there of those stocks.
All right, so Chris, final question here. If our audience wants to sign up for your subscription services, where do they go about it?
Sure. If they go to thetechnicaltraders.com, you can go there and you can see we've got several different services, all the way from long-term investing down to swing trading ETFs, stock trading, and options trading. So there we provide a blog where every morning we usually post some type of trading advice, or not advice, but trading analysis on the market, which we posted something interesting yesterday showing that over the next few months, we could start to see a very big stock market correction. When you look at the 10-year yield, the treasury yield, pretty interesting analysis. And of course, we've got lots of free information, and we've got a premium service as well if people want to get active and follow our trades.
Well, Chris, thank you so much for joining us on the show today.
Yeah, thanks for having me. Always a pleasure.
And for our viewers at home, don't forget to click that subscribe bell below. We'll see you next time on The Dive to talk all things small caps.